Hello everyone, thanks for joining us this morning and welcome to this educational presentation of trading candlesticks entirely wrong. Now I would venture to say that the majority of all traders, regardless of what market you trade, regardless of what time frame, have either used or are currently using candlesticks as part of their bar chart of choice. Candlesticks are extremely popular. In fact, I first started using candlesticks back in the late 70s, early 80s when they were first introduced to Western trading. But it's my opinion that most traders are trading them incorrectly. For example, let's take a look at the conventional wisdom, what conventional wisdom teaches us about actually applying candlestick patterns. And it says candlestick patterns are reversal patterns, usually occurring at the top or bottom of a trend. This is the way the majority of traders are taught. This is the same way I was taught some 40 years ago when I first started using candlesticks. And if we look at this chart right here, we see that we are clearly in a strong downward trend. And so using conventional wisdom, what we want to do is look for some type of reversal, some type of candlestick that will tell us most likely that we've reached some type of bottom or a stop in trend, and we're going to quickly reverse. Now, in this example here, we actually had two examples. We had support right here. So that was our first chance and first insight that we were actually stopping. Perhaps we were looking at the volume or maybe looking at what the institutions were doing. And then once we applied the candlesticks, we see that we not only had one, but two bullish engulfing patterns, probably the easiest and most identifiable of all the patterns around in candlesticks. And these would be a reversal telling us to buy here. So let's say that we jumped in and maybe purchased some options, maybe purchased the actual stock. It really doesn't matter. And then this happened, okay? Look familiar to anybody? We followed all the rules, we followed conventional wisdom, but it didn't seem to work right. Well, this will also happen to the upside. For example, in this older chart of Apple, we see here that we had a really nice run up in price and a nice gap opening. And then for the remaining of the week, we continue to go higher and higher. But let's say you go to that chat room and they don't like the stock here. They think it's too overbought. In fact, all the indicators are overbought. So you want to sell it, all right? For all intents and purposes, the guy in the chat room knows what he's talking about in this trading room. So you also at the same time see that there's a bearish engulfing pattern here, a very negative sign that you want to find at the top of some upward move. So let's just say you want to go short, maybe buy the puts in Apple. At least it's going to come down here and fill this gap. It's a high probability setup to go short. So you sell the stock and then this happens. So once again, we ask ourselves, what are you doing wrong? I mean, we're implementing them correctly the way we've been taught, but is there something that you're doing wrong with your candlestick trading? Because most candlestick traders, it's been my experience, are not seeing the results that they've been, promised to believe that they would achieve with candlesticks. Well, I'm going to answer that question today and show you how simple it is to apply candlestick trading once you know this secret ingredient I'm going to be sharing with you today. And everything is going to be displayed with ease and very simple and very just one-click access on our PTS Primo charting platform. This is the PTS charting platform that teaches traders how to trade in virtually all markets and all time frames. So this is going to be a great presentation today, very educational, very informative. Welcome once again. My name is Steven Primo, President and Founder of Specialist Trading. I teamed up with Pro Trader Strategies around 10 years ago with one goal in mind, and that was just simply to educate traders. That's what we feel is missing. That is the missing link that most traders really can't seem to find or achieve, because we've always been taught to rely on someone or something else to tell us how to trade. Either it's some indicator that's going to give us the magic results, or some magic system, or some trading guru that we just blindly follow whatever he or she does. And if those things work so well, then why are 85% of all traders, destined to fail? Those are the estimations of all traders. Now, trust me, I've been trading for 40 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name specialist trading. A specialist simply made markets in roughly about 50 or 60 stocks. So I made markets during the crash of 1987 in the bull market. And I traded straight up markets, straight down markets, any system or any technique you can think of, I've traded. They've probably been rebranded and given a different name. And so in my 40 plus years of trading, I know what works in terms of consistency and I know what doesn't. And all the things that you've been taught about candlestick trading, I was using some 4 decades ago, and they didn't work for me. So I'm here today to really enlighten you and really share with you an easier and simpler way to trade with candlesticks that I hope will get you on the road to consistency. So this is going to be a great educational class today, but before we begin, we're required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this candlestick technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view the disclaimer, once again, I know a lot of you are people that have seen my presentations before, but we have a lot of new faces. So if you're new to my webinars, we want to invite each and every one of you to follow us on Twitter. I post a lot of great free educational information on a daily basis, anywhere from little bits of financial wisdom I've accumulated in my 4 decades of trading to actual signals that were generated using some of our strategies. So lots of great free education. Feel free to follow us on Twitter. Okay, so as I stated in the opening statements, we are different from other webinars you may have attended in that our only goal is simply to educate you. We are first and foremost an educational company. We're not here to promise you some master system that never fails. This has tremendous statistics going back 20, 30 years. We're not here to tell you that we know the perfect time frame or the perfect market for you to trade. We don't believe in that. In fact, our philosophy is no two traders should ever trade alike. You should never try and ask someone what they're doing or try and mimic their trades. You should never trade a time frame that someone has had success in just simply because they've had success. You've got to find your own way, and the reason why most traders don't do that is because they've never been provided with the education. Well, that's the gap we fill at Specialist Trading and Pro Trader Strategies. We provide all of our students around the world in over 115 countries and in virtually every state in the United States sound fundamental education that has stood the test of time. These are things that were taught to me when I was struggling some 4 decades ago, but they've sustained me now for 4 decades, and hopefully they'll be able to do the same for you. So as you see here, my goal is not to force feed you signals. My goal is not to tell you I have a master system that never fails. My goal is to teach you so that you can make your own decisions on how to trade. This is the same edge that was taught to me, and hopefully it will be able to sustain you going on 40 years. Now, since this is going to be an educational class, I do want to take questions, but we have a good crowd here today, and I don't want to stop for every slide, or we might be here far too long. I don't want to take all of your Wednesday morning. So if you have a question, please wait till the very end to ask. I promise I'll get through all of the questions at the very end. Write it down or remember it. The only question I will answer is one that's already been posted, and that is, are we recording this? Yes, we record all of our presentations. If you have to leave early, or if you're having technical issues, don't worry. We will send each and every one of you a link to this recording so you can study the presentation at your own leisure, okay? Okay, so once again, if you joined us late, please wait till the end to ask questions. All right, with that stated, let us begin today's class. Now, we're going to start with a question. What is the correct way to trade candlesticks? Because once again, the majority of you have probably used or are currently using candlesticks in your trading, and I'm sure most of you, if you were right here, we had an actual live class, would tell me that you're not seeing the type of results you thought you were going to be getting. Well, remember, once again, I was taught candlestick trading, the fundamentals, the conventional way to trade them some 4 decades ago, and I suffered the same thing. And here's what I've learned. Candlestick patterns will have a higher level of consistency if you trade them in sync with the trend. Okay, you see how we highlighted that at the bottom and underlined it? That's how important that is, because it goes entirely against everything we were always taught about candlesticks. Remember, conventional wisdom says they're supposed to be used as reversal patterns, picking a top or picking a bottom. Well, they couldn't be any further from the truth. It didn't work for me 40 years ago, and they really don't work now in terms of consistency. Sure, every once in a while, you'll get a great reversal pattern. But I have found over the years that you'll get a higher level of consistency by simply trading candlesticks in sync with the trend. So as we see here, we have a very strong downtrend right here. So obviously you wouldn't want to be buying anything. And at the same time, you have a very strong uptrend. In this situation, you wouldn't want to be selling anything or looking for a top. You want to be going with it. Here's the only problem though. Everyone has a different idea of how to find or discern what the trend is. And some of them are okay, some of them are terrible. But let me just share with you some of the most common and generic ways for finding out what the trend is. You can either use indicators. A lot of people like to use overbought, oversold tools or some type of trending pattern with a moving average. Others will look for actual chart patterns. Higher highs, higher lows, or vice versa for downtrends will indicate the beginning or end of a trend. And still others like to look at higher and lower time frames. They'll say, well, it's clear that the weekly is really going straight down, so I want to make sure that the daily is going straight down. That's how you become in sync with the trend. These are all generic, and they're all well and fine. They have a certain level of consistency, but they really don't help you as much as you'd like. In other words, this can happen from time to time. As we look at this chart here in Aetna, okay? Now, obviously, in hindsight, we're in an uptrend. The trouble is, with most of the trending tools and the way we've been taught to find out where the trend is, we usually find out and are convinced at around these levels. So this is where we decide to jump in and buy, and then this usually happens, right? How many of you have had a trade, maybe in the last week, where the minute you bought something, it went straight down, or the minute you sold something, it went straight up? This is because, most likely, you're out of sync with the trend, or you're getting in too late. So, what do we need? What we need is an early trend detector. We need something that's able to tell us well in advance before the other so-called great trending tools tell you when a trend is in place. Now, even though nothing can tell you at the very beginning, here is a tool that has helped me tremendously because it tells me of a trend earlier than anything I've found in the last 4 decades. And that's the PET-D. I've talked about it many times before. This is probably the single most powerful tool we have at Specialist Trading and Pro Trader Strategies. It's something I've been using on a daily basis going on 4 decades now. So let's look at that example once again and show you how the PET-D can be applied. All right, we had a nice uptrend and then it quickly changed. How could this PET-D have helped us? Well, on our platform, it's as simple as just clicking on the PET-D tab right here in the green upper strategy tab, and automatically the colors will change on the bars. A series of green bars means you're in an uptrend. A series of red bars means you're in a downtrend. Now, look how quickly and how early the trend was established well before it started going up. Where we normally would have decided that we're in an uptrend right around here, we had a series of 3 to 5 green bars already telling us down here that we're going higher. And then conversely, well before we decided that we were breaking down, we knew in advance with a series of 3 or so red bars. Now, let me tell you what the PET-D is not. The PET-D is not a predictive tool. It does not tell you how high or how low something will go. Okay? It also does not pick the tops and bottoms. So I'm not going to sit here and tell you that it will tell you exactly when a top is and change colors from green to red or vice versa. But what it does is it is a translator. Basically, it's translating on a tick-by-tick basis what the market wants to do. So all we're doing is jumping on board. So if the market wants to go higher, then we're going to be a buyer. We're not going to try and pick a top because we don't know how high it'll go. No one does. If the market wants to go lower, we're not going to try and pick a bottom. We're just going to jump on board in that direction because we don't know how low something will go. Remember Enron? It went down to 0. No one knows how low or how high something will go. So why not try, instead of standing in the way of the trend, why not just jump on board and be in sync with it? Well, the PET-D is the best thing I know of for trading in sync with candlestick patterns. Now remember, we had that downtrend right here. Probably at this point, somewhere halfway in the middle when we broke this so-called support, you decided, well, we're in a clear-cut downtrend. I thought this was a pullback, but it looks like we're going lower. Well, that's a little bit too late. What if we applied the PET-D? Well, look how early the PET-D told us we were in a downtrend. The bars had already changed colors to red way in advance of this strong downward move, okay? And how about that uptrend? Well, sure, looking in hindsight, we figure, well, we made a higher high and a higher low, so I guess we're in an uptrend at these points. Well, we applied the PET-D. We knew well in advance way back here that we wanted to go higher. Remember, the PET-D is a translator. If the market speaks another language that we don't really understand, well, we need a translator to tell us what it wants to do. We don't have to try and figure it out and outguess it. We just need it to tell us what it wants to do, and then we jump on board. The PET-D is that tool that translates what the market wants to do. Okay, so now let's talk about trading engulfing patterns in sync with the PET-D. We can virtually trade any candlestick pattern, dojis, morning stars, hammers. It makes no difference, but the most easily recognizable pattern, in my opinion, in my 4 decades of trading candlesticks, is the engulfing pattern because it's simple. It's only a 2-bar pattern, and it applies really simply with this trading in sync with the trend or the PET-D. So here is the technique I want to describe for you if you're thinking about buying. Bullish engulfing patterns. You only want to buy if the engulfing bar, that's bar number 2 in that 2-bar pattern, is colored green. Now, we don't care what the bar before it was colored or even what all the bars before it were colored. All we care about is that bar number 2 is green. So if we look at a standard engulfing pattern, it's a 2-bar pattern. Bar number 1 is usually lower, although it doesn't have to be. It could still be up, but in this case, it's down. All we're interested in is that bar number 2's open to close range engulfs bar number 1's open to close range. That could be a down day or an up day. It makes no difference. Now, that has a high level of consistency, but we kick up that consistency even more when we apply the PET D. And we see here that bar number 2 is outlined green, all right? The reason why it's white or hollow is because it's an up day. It opened and closed higher. The outline is green because it's telling you that the PET D is saying that the trend is up. So that is a very bullish sign. Now, let's look at this example here in WIM. Conventional wisdom would say, well, Steve, we're only looking for engulfing patterns at the bottom or the top of a trend as a reversal pattern. There is absolutely no trend here. In fact, we're going sideways. This is a range market. So that $10,000 class I took always says to stay out of range markets because that's where you get whipsawed. So I'm not going to do anything here and lose a lot of money. I'll wait till the dust settles and just kind of see till a firm trend is established. Okay, this is the way most traders trade. It's sound advice, but unfortunately, you usually miss some really nice opportunities while waiting. This is where the PET D comes into play because it is so sensitive, it actually doesn't see this as a ranging market. Now, right off the bat, what do we find here? We see a bullish engulfing pattern. All right, but how can we trade this using conventional wisdom? We're supposed to find this at the bottom of a trend. There's no trend here. We're just going sideways. Well, we don't care about that. Remember, conventional wisdom doesn't work. If we apply the PET D, we see that bar number 2 is colored green. The outline is green. So this is all we're interested in. In this 2-bar pattern, bar number 2 is green. So that's telling us, forget about conventional wisdom, seeing that the trend has to be going lower and we buy at the bottom. Forget about range markets. Forget about the institutions or support and resistance or volume. There is no consistency in those things. All we want to do is listen to what the market wants. That's all we care about. We don't care about all these, highly complicated status symbols and things that are supposed to work. I mean, trust me, I used these 40 years ago. They didn't work for me. They're not about to start working now. Just listen to the market, and the market right here is telling us that there's a high probability it wants to go higher. So where everyone else is sitting on the sidelines, you could have jumped in and had the potential of capturing 12 points in 1 week, okay? Now, let's look at the opposite side, bearish engulfing patterns, all right? We're only going to sell if the engulfing bar, that's bar number 2, is colored red, okay? We don't care what the bars previous to it were covered. If they're colored red, that's fine. If they're all colored green, that's fine. It makes no difference. We just want to see bar number 2 colored red by the PET D. So here's your standard bearish engulfing pattern. It's a 2-bar pattern. Bar number 1 is usually up, but it doesn't have to be. It could still be down. All we're concerned about is that the open to close range of bar number 2 totally engulfs the open to close range of bar number 1. This is a high level of consistency in going lower, but we can kick it up to an even higher level of consistency if we apply the PET D. And if bar number 2 is colored red, that's a very strong probability that we're going lower. That's all we're concerned about. We don't care about what the trend is. We don't care about what news is happening. I'll show you some examples later on about some news where it was identified weeks in advance that you had a signal prior to the news even coming out. All right, so here's the way conventional candlesticks are usually applied, the way I first started trading with them, the way you may be trading with them right now. It's clear that FOSL, First Solar, is in a downtrend. All right, so conventional wisdom, the traditional way of trading candlesticks would say, well, we've got to look for a bottom here. We've got to look for some candlestick pattern that's going to tell us a reversal is in effect, okay? And what do we have right here? We have a bullish engulfing pattern. That's an amazing sign. That's most likely the bottom, okay? And let's say that $1 million indicator you purchase is not confirming this. Maybe the institutions are ticking up and they want to buy this. So you think, this is a great buy, all right? But when we apply the PET D, what's it telling us? It's telling us that, no, this is not a great buy. It's not a high probability buy. Why? Because the engulfing bar, or bar number 2, is colored red. So the translation is saying that, well, the trend is down. You don't want to buy against the trend. We always want to be in sync with the trend. So why would we buy this? This is silly. And that would have been wise to take this advice, because look what happened, okay? Now, if we were trading in sync with the Pat D, we're looking for bearish engulfing patterns, where you would have had one right here, and if you missed that one, another one right there. So do you see how trading in sync with the Pat D, any candlestick pattern, can really improve your odds for consistency? Trying to pick tops and bottoms is, as I've often said, similar to playing the slot machines in Las Vegas. They're designed every once in a while to give you a win. And all the lights go off, the bells and whistles, and you start to think, hey, I'm doing pretty well. I guess all this hard work of being here for the last hour is paying off. But they're designed to give you this false sense of security that you're doing well, because they want you to stay there. If you stay over time, you most likely, eventually, the odds will be that you'll lose everything. You'll give it all back. That is the exact same thing with trying to pick tops and bottoms or trade candlesticks the conventional way. If you use them over time, trying to pick tops and bottoms or reversal patterns, most likely you'll give all your money back. Take it from someone who was doing this 4 decades ago. It didn't work then. And I was lucky enough to see the difference with the Pat D. So let's look at some more examples. And when we combine these two techniques, we have what we call our candlestick combo. This is one of our highest level packages we have at Specialist Trading, because it's trading candlesticks with the Pat D. So you're in sync with these candlestick formations. Now we're going to focus mainly on engulfing patterns, okay? And this is going to be really simple to apply using our platform. Remember, you can apply this on your own, but if you have the Pat D and you know candlesticks, everything is one click away. We make it so simple. It's the educational portal that makes trading extremely simple. We designed it that way with that one purpose in mind. All right, so let's look at some recent examples using this technique. Some are better than others, and we'll look at other markets as well and other time frames. All right, here's AABA. All right, this was in March last month, and as we see here, kind of going up, then back down. Not much of an idea, but we have a bullish engulfing pattern right here. Well, someone could say, well, yeah, but we're not really at the bottom of a downtrend. You know, that's not the way I was taught. We're kind of just in a range here. Remember, we don't care about those things. We click on the Pat D on our platform, and it automatically changes the colors. What is the color of bar number 2? Well, it's outlined green. The reason it's outlined is because it's an update. Remember, bar number 2 in a bullish engulfing pattern is an update. It opens here and closes higher. So we want to outline it green. So this is actually a very high probability setup. Had you determined some way to go long, either by the calls or the options, you would have had a very nice trade in the next week or so. Let's look at CTXS, okay? Once again, someone saying, well, Steve, we're in a range here, nothing really happening, but what do we have? We have a bearish engulfing pattern right here. That's a 2-bar pattern. As you can see, bar number 1 closed down, but remember, all we're concerned about is bar number 2's open to close range engulfs bar number 1. So that's a valid bearish engulfing pattern. But we still don't have the odds in our favor until we apply the Pat D. We want to see bar number 2 colored red. Once we add the Pat D, we see that, yes, even though the bars before it were colored green, it makes no difference. Bar number 2 is colored red. This is a high probability setup. You could have gone short roughly around 104, 105. The stock went down 6 points in the next week, okay? Really simple. You see, trading is simple. It's just us that overcomplicate things. You can look at news. You can look at support and resistance. You can look at the institutions. You can overcomplicate your trading if you want to. But at Specialist Trading and Pro Trader Strategies, it's not required. Remember, we want to keep things as simple as possible. All right, SBUX, Starbucks. All right, Starbucks has been going up at a nice uptrend here in March last month. And conventional wisdom would tell us to look for a reversal pattern. But what do we have here? We have a bullish engulfing pattern. So we were always taught we can't buy as it's going higher, when in all actuality, that's when you're supposed to buy. And if we apply the Pat D, both bars are green, so this is a high probability setup. Starbucks roughly went from 72 to 77 in the next 2 or 3 weeks. See how simple this is. If you're trying to buck the trend, it's like gambling in Las Vegas at the slot machines. Every once in a while you'll have a winner, but most likely you give it all back when you see situations like this. All right, a downtrend in Monster MNST. Okay. All right, here's a bullish engulfing pattern. You could say, well, Steve, I don't care what you say. It works for me. Here's a great example. I'm going to go long this. I'm going to buy the calls tomorrow because this stock, the chat room I go to really loves this stock. The guy who is in charge of the trading room, he's been touting it for weeks, and we have a bullish engulfing pattern now. It's the bottom of a downtrend. And I hear the institutions like this, so these are all really positive signs. Okay, you see how every one of my justifications was based off of what someone or something else was telling me what to do in this. And this is the way 99.9% of all traders trade. This is why we provide you with education so that you don't have to rely on these outside sources because they're usually wrong. Take it from someone who used to trade that way. It didn't work for me. For my first year on the trading floor, I thought I was going to be fired because I was using all of these things. I was looking at the institutions. I was looking at all the news, all the earnings. I was looking at the economic reports, and nothing worked. I traded candlesticks the same way. In fact, I would have purchased this right here without looking at the PET D. And guess what? Bar number 2 is outlined red. So there's no reason I should have bought that. And that's the reason why. Because the market was telling me the trend is still down. You see how sensitive the PET D is and how it can really help you. Let's look at an example here in REGN. Okay, we had 2 buy signals. And this is a good example of how the trend changes and how these tools can quickly reverse and still keep you in sync. We have 2 bullish engulfing patterns. All right, positive signs. When we apply the PET D, we see that they're valid. All right, so you could have gone long for roughly about a week and made some money, but all of a sudden right here, it looks like we're running out of gas. There's a bearish engulfing pattern, but bar number 2 is green. So we're not going to do anything. We're going to still stay in the trade. And now it goes against us. So now we have a small loss, or maybe we're breaking even. Maybe we didn't get out, okay? That's okay because look what the market's telling us. You don't have to sit there and play the victim card the way most traders do, or go in the corner and lick your wounds and say, this stuff doesn't work, I took a loss. Because the market is always giving you opportunities. If you had taken a small loss in this trade, you have another opportunity to get back in because there's a bearish engulfing pattern, and bar number 2 is colored red. So you have a choice to recoup your losses, and you would have had a very nice opportunity to do that. Now, if you missed that trade there and finally got back on the horse, you had another chance to get short. You could have still recouped the previous loss right here. So this is why we say our methods are consistent. Consistency means you will have losses every once in a while, but you have a method that you feel confident in to recoup those losses. The quicker, the better. Tiffany, all right, Tiffany is in a really strong upward move. Conventional wisdom would tell us, hey, we've got to sell this, right? But what do we have? We have all green bars. So rather than looking to sell it, we're looking for engulfing patterns. And this is what I mean about the sensitivity of the PET D. When the market was basically going sideways to lower, we had a bullish engulfing pattern right here, well before the nice upward move. So this was a good 20 points to the upside that you could have taken off of this setup here. Now we have here at the top, you could say, well, I've got a nice profit now. I'm going to get out because what do I have? I have a bearish engulfing pattern. But look what happened. The bars remain green and it continued to go higher. So this is why we never want to buck with the color of the PET D. Even though it looks like we were running out of gas right here, we had an evening star perhaps or a bearish engulfing pattern, all the bars remained green. So we had a sell-off for about a week. That was a buying opportunity. That wasn't a selling opportunity. We have another market going straight sideways here. GILD, this was in February coming into March last month. Okay, people would stay away from this, but what do we see? We see 2 bearish engulfing patterns, all right? So even though it's not at the top of an uptrend, the market is telling you off of a pattern that it most likely wants to go lower. How do we get that extra level of consistency? We add the PET D, and we see that both of those bars, the bar number 2 in the pattern, is colored red. So this is a high probability setup to go short, roughly around 65, 66. The stock drops about 4 or 5 points in the next 3 days. How about TMUS? Well, here's what we mean about consistency again, okay? We have a bearish engulfing pattern. We apply the PET D, and yes, we immediately went down from roughly 72 all the way down to 68. Now, if you didn't take any profit, it's starting to go against you, but that's okay. You have to be quick and you have to be able to reverse because a bullish engulfing pattern was generated days later and it was confirmed. Bar number 2 is red. So if you didn't get out this was the time, this was the market telling you. Remember, not some guy in a chat room or not some guy on TV or some earnings report, but the market telling you it wants to go higher now. So come with me. Don't be short anymore. Let's go long. And if you covered your short and went long, well, you had some nice profits to the upside, another 4 or 5 points. Here's a very strong downward move in Urban, URBN, okay? Looking back in hindsight, easy to see that we were going lower. Once we applied the PET D, we knew well in advance we were going lower, even though we have a splash of green every once in a while. Remember, we need to see anywhere from 3 to 5 bars of a different color to tell us that the trend has changed. And the majority of these bars are all red, so we're in a downtrend, all right? Look at all the opportunities the market gave you to go short, just looking at a bearish engulfing pattern, okay? There are countless other patterns to find in a downward market, okay? But just looking off this one candlestick pattern, look at all the options you had to go short as the market went lower. This is the beauty of trading in sync with the market. Do you think you would have done well trying to look for a buying opportunity? Here was a bullish engulfing pattern right here. How well would that have worked out as the market went lower? All right, we have an uptrend in RTN, all right, where most traders are looking for some type of a reversal pattern. We're looking to go long. Now, the bars changed green right here in January. And what do we have? We have one bullish engulfing. It's confirmed. We have another bullish engulfing and still a third bullish engulfing. This is what we call a cluster of signals. Even though it's not guaranteed, it's not statistically back-tested because we don't believe in back-testing. We have no statistics or back-tests because we don't believe in it. We think everyone should trade differently. But this is a very high probability setup because we have the market telling us 3 different times it wants to go higher. And the price was roughly around 160. It immediately went up to 190 coming into the beginning of last month. If you missed any of those 3, I believe there was another setup right here you could have taken advantage of, a bullish engulfing pattern. All right, BIIB. This is an example of sometimes it takes a little long for the trade to develop and to come to fruition, but the market always tells you what it wants to do. Once again, someone using conventional wisdom would say, well, there's absolutely no rhyme or reason to do anything here. We kind of don't have enough data to come up with any clear analysis, and we're just going sideways. Well, not really. This is where trading is really simple. You don't need to overcomplicate things. Even just looking back a week or so, we have a bearish engulfing pattern, all right? We apply the PET D, and bar number 2 turns red. It makes no difference what the other bars were. As long as bar number 2 is red, that's our sell signal. Now, as I said, sometimes it takes a little bit longer, but the stock was roughly about 320, 325 when this sell signal was generated, and it went down over 100 points in the next couple of weeks. So you think you could have done well purchasing some puts on this? I know it's an expensive stock, but roughly it lost over 1/3 of its value in a couple of weeks. Someone would say, well, Steve, you must have looked at the earnings or you must have known about that announcement or something. No. All we know is that the market told us it wants to go lower. All right, so let's look at a different time frame, the weekly bars. Okay, here's some older examples of weekly bars. Here's one in Apple. All right, this was at the beginning of the year. We're only looking at roughly 6 weeks. That's enough information to tell us we have a bullish engulfing pattern right here. We apply the PET D, and we see that bar number 2 is outlined green. That's all we need to know. We don't care that all of these are red. And the stock goes up from roughly 165 up to about 45 or 50 points in the next month or so, coming into April this month. How about FAST, fast? Okay, once again, another example of how the market shifts, but it's up to you to jump on board. We have a bearish engulfing pattern. It's confirmed, colored red, and we went down about 3 or 4 weeks from roughly 55 down to 49, 48. But then look what happens. We have a bullish engulfing pattern, and bar number 2 is outlined green. So on just one bar right here, close to the very bottom, you knew to shift gears and go long because the stock went up from 55 all the way up to 70 coming into April, this last week. How about indexes? Okay, now a lot of our traders like to use the candlestick combo to determine what the overall markets are going to do. So they don't necessarily want to trade the actual index or the market, the ETF. They just want to get an idea of what they think the market's going to be doing. For example, if you saw a buy signal in the spiders or a sell signal in the QQQs, don't you think that that would give you a nice correlation as to which direction the markets may be going? Here's an example in IWM. That's the ETF, excuse me, for the Russell 2000 index. Once again, kind of going sideways to lower. Conventional wisdom would say, let's look for a reversal pattern right here, a bullish engulfing pattern, right? This is the way I used to trade. This is the way I was taught prior to learning about the PET D. But once I applied the PET D, you would have known never to buy this. Why? Because you're standing in front of an oncoming train. There's no reason why you want to be standing in front of the trend. You should be going with the trend. And look what happened right after that. You would have had a higher level of consistency if you were looking for selling opportunities like right here, 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 and here. See, the market has always given you opportunities. Only thing wrong is that we are usually looking to fight the market, to go against it, to try and beat it, to find a top or a bottom. Trust me, there is no consistency in that type of trading. Remember, it's been estimated that 85% of all traders fail. And when I say fail, I do not mean they go into a slump or drawdown. Failure means they lose all the money they set aside for trading. You never want to be in that category. The easiest way to do that is to trade in sync with a trend, to go with what the market wants to do. And then the easiest way to know what the market wants to do is to use its translator, the PET D. Here's another example in the QQQs. Here's a weekly chart. As you can see, this was last year, last spring. We were going straight up. We had some nice bullish engulfing patterns. But what happened here at the very top, we had a really strong downward day. This was in October of last year. But that's okay. You shift gears and go short. And look at the QQQs. Fell out of bed. They lost all the gains they had made in the previous year. But you would have known that in advance. This is how the candlestick combo can help you with ETFs and indexes. Okay, so let's recap before we go to question and answer. I want to tell you about a great discount, a great offer we have for all the attendees today. But firstly, remember, only buy or sell candlestick patterns that are in sync with the trend. You will have a higher level of consistency if you're going with the trend as opposed to trying to buck it the way we've always been taught that that's the way you trade candlesticks. There's really no consistency in that way of trading. You'll have pretty good trades every once in a while. It'll give you that false sense of security, just like the slot machines. But most likely, you'll end up giving it all back. I'm sure most of you have already been there before. That's not trading. That's really just gambling. Trading is when you have a plan that's thought out, that's in sync with the market, and has a high level of consistency. Now, you can apply candlesticks with any trending tool or idea or indicator, but if you want to trade with the best, the one that I have been using for 4 decades and works better than anything I've ever used before, that's the PET D. Now ask yourself, do you think this method could have helped your trading this past year? Go back and look at your last 10 or 20 trades based off candlesticks. See if this could have helped you. Remember though, this is simply a method. So extremely important points to remember. We did not talk about a complete strategy. I only shared with you high probability setups for entering or exiting. We never talked about exactly where to enter. We didn't talk about advanced entry signals. We didn't talk about at all where to place your stop because, as I said before, our methods are consistent, but that doesn't mean that every trade will work. You will have losses from time to time. I showed you a couple today. So where would you place your stop? We also did not talk about exiting. Where would you have exited? Some of our traders like to get out with a very quick exit. A lot of them like to stay in for as long as possible. So where would you have applied an exit? And then finally, we didn't talk about money management. How many shares, how many contracts should you be using? All right, these are all extremely important pieces of the puzzle that make up a very robust and strict trading plan. So we did not speak about any of these. All we did was spotlight a high probability entry area, okay? But how would you like to get the answers to all these? Well, we have a great discount for all the attendees today. We're going to offer you our candlestick combo. This is strategy number 5 along with the PET D tool. You're going to get instant course access, detailed video instruction, and we will teach you all the different variables for entries, exits, and stops. Now, a lot of students are always saying like, well, Steve, what's the win-loss ratio on this? What's the percentage of winners, percentage of losers? There is no percentage of winners or losers. There are no statistics because remember, as I stated at the opening, each trader should trade differently. That's why we provide you with roughly 6 or 7 different entry points, 6 or 7 different exits, and 6 or 7 different stop placements. Because Everyone has a different risk parameter. Everyone knows how long they want to stay in the trade. Some traders like tons of trades a day. Others only like to trade once a week. So there's no way to say what the right way to trade is and what the wrong way, to keep statistics on only one way. The right way to trade is the way that makes you feel the most comfortable. If you want a very tight stop with as least risk as possible, then you'll enter a certain type of stop. Is there anything wrong with that? No. What's wrong is when you trade a method that it goes entirely against your parameters. Okay? So we give you all these different parameters and we work with you so that you can decide. This also comes with the entire course rules along with 4 pet D trading techniques. I just shared one with you today. We also have 4 extra trading techniques that are just simply based off of pet D patterns. This includes both the add-ons, so if you want to apply them to your platform, we can apply them to TradeStation, to NinjaTrader, to MT4, to Metastock, to Sierra Charts. Most of the major charting platforms, you can apply our add-ons. You simply upload them onto your computer. But we have an even better offer for you. Why make it more difficult than it has to be? So we're going to offer you this for $4.97. That's really an inexpensive price. One time cost of $4.97 plus $97 per month. Okay, this is for a limited time only. This is a very inexpensive price. You saw some of the examples that I showed you in the last couple of weeks with these charts. I'm not saying it's guaranteed, but most of those examples would have made that cost in just one trade. Now, if you want to purchase everything with no $97 per month, it's $29.95, and we're going to waive the first year of the annual fee. So it's just a total cost, one-time cost of $29.95, and we will you will have everything for life. Now, we're not going to stop there, though. We're also going to throw in 12 months of the PTS Primo charting platform. All the examples, the ease of use you saw today and how you apply it is right there. You're going to get the platform for a full year. Now, this is usually a nearly $1,200 value. Well, guess what? We're throwing this in entirely free. There's no cost at all. You're going to get 1 year free of our platform. Now, let me show you what is also included in that. Obviously, you're getting strategy number 5. You're going to get the Pet D directional tool, the ease of use, one-click access. But you'll also get our proprietary buy-sell line. This is a tool for defining the overall trend, okay? Where the Pet D is the short-term trend. The overall trend is our proprietary buy-sell line. We have 4 different features for that. You also get automatic exit levels. With all of our strategies, we have automatic exit levels. And this is just one of the many different exit levels you can choose from to find where you want to get out of the trade. It comes with over 90 of the most prominent technical indicators. If you are a fundamental trader, well, guess what? We've offered you free Bloomberg TV and provided it for you on the platform. We have an icon that all you have to do is click on the icon and it opens up the media page. And you'll see a live TV of Bloomberg TV. So any economic report or announcement is right there on your screen. And then this all comes with personalized tech support. Now, one feature that is also included, I didn't talk about, is in our special bonus. And this is the scanner. We're going to include the scanner, which is, I think, worth its weight in gold because it's so simple to use. And you can be scanning for the candlestick combo signals the night before, and you have a full list in front of you, and it takes less than a minute to be generated. Let me show you how simple it is. On the platform, you click on strategy number 5. This drop-down menu appears. You click on scan. This window will appear. You'll see a series of green and red bars. The green bars mean that those are the buy signals for the next day in strategy number 5. The red ones mean these are the sell signals. Now, let's say I had given this presentation a couple of weeks ago and you had become a member of the Candlestick Combo course. These are some of the signals you could have scanned for in this past week. Okay? CERN, CERN, all right? This was on April 5th, just a week or so ago, all right? Now, looking at this once again, conventional wisdom would say, there's no trend. There's nothing to do here. I don't want to trade this. But if you scanned, you would have seen that a buy signal was generated using strategy number 5. That's your candlestick strategy. Okay. Now, to highlight it, to see if it has even higher level of consistency, you click on the Pet D in our green strategy tab up here, and we change the colors. And guess what? It's been confirmed. So we have a candlestick combo setup here, a high probability setup. This was on the 5th of April. The stock went up 9 points in 2 days. You think that could have helped you? You could have scanned for that previous 2 days in preparation before that actual big, large gap up. Okay, let's look at something that happened in the last couple of days. All right, Now, a lot of people are always saying, well, Steve, what about news? You know, the news kind of, gets in the way of all this stuff, doesn't it? Well, sometimes, but it's been my experience that oftentimes these setups are generated prior to news events. For example, Yahoo Finance reported yesterday, HCA Healthcare plunged over 10%, okay? It says they're under pressure. Most of the largest for-profit hospital operators are under pressure thanks to a proliferation of presidential candidates supporting Medicare for all legislation that might pass after the 2020 election. So investors worried about HCA's healthcare distant future pushed the stock down 10%. Okay, so this came out. If we look at the chart, here's where the news came out right here. This was yesterday. This is the way most traders trade. They usually hear the news and they say, boy, this is terrible. I better get out of this. Or the healthcare stocks are really going to go down with what's going on in the presidential candidates for 2020. They're not good stocks. I should sell all my holdings and probably look to go short or buy some puts. 99.9% of all traders trade that way. Is there any way we could have found out prior to the news? Well, sure there was. If you would have used the scanner, you would have seen that there was a sell signal right here, a strategy number 5 sell signal. You apply the PET D, and it was colored red. So it's telling you it's a very high probability sell signal. So this would have happened on the 11th. You would have had plenty of time to be in short before that 20-point plunge. In fact, the candlestick combo sell signal was generated 3 days prior to the news and prior to a 20-point plunge. So these are things, you know, I know a lot of you may be going to webinars or presentations and they show you some great examples that happened maybe 6 months or a year ago. This happened last week. So this is the type of stuff that's being generated a lot. Now, we can't guarantee that they're all going to be profitable like this, making 20 points in 1 week, but there are a lot of consistent winners. Now, you can also scan for other markets, okay? It doesn't have to be stocks. Here is a daily chart of the Canadian dollar. 2 candlestick buy signals were generated, both outlined green, and 350 pips in the next couple of weeks. Same thing to the downside, a 4-hour chart of the dollar yen, candlestick combo sell signal, colored red, 100 pips in the next couple of days. How about intraday scan? Here's a 10-minute chart of the E-mini, okay? Conventional wisdom says we're in a downtrend. We should be looking for buy setups, right? Well, no, because there's no consistency. We're actually looking for sell setups. The trend is down. There's a strategy number 5 sell signal, colored red. The E-mini fell 20 points in the next hour or two. That's over $1,000 potential per contract. Could have scanned for an hourly time frame and generated all these buy signals, all valid candlestick combo buy signals in the E-mini. So you see, a year from today, you will have wished you became a member of this course. We're making it so simple for you, giving you options, different ways in which to purchase at inexpensive or for a one-time fee to get included, okay? So remember, the attendee discount for today for our candlestick combo special, only $4.97, one-time payment of $4.97 and then $97 per month, which includes 12 months of the PTS Primo charts absolutely free with all those features and included a lot more, which I didn't have time to go over. If you want to have a one-time payment and just own it outright, it's $29.95 and we'll waive the first year of annual fee, okay? So this is a great opportunity to turn your trading around. All right, we're in the first quarter here of 2019. I know most of you aren't seeing the results you wanted to or you promised yourself. This is a great way to get back in sync with the market and have your trading get that consistency you've been searching for. So here's how to take advantage of this. Contact Pro Trader Strategies. They're my sister site. I developed the platform with them and they handle all of our discount of all of our courses. You can either email them. I would probably suggest calling them directly at area code 310-598-6677. There's absolutely no obligation. They would be happy to answer any questions concerning discounts or payment plans, and they would be happy to answer, I should say, any question concerning the PET D or the strategy number 5. Now, that link you see at the very bottom will take you to the sign-up page. You'd have to copy and paste that onto your browser, but they've just posted a live link in the chat box on the GoToWebinar column on the far right. So you don't have to copy and paste that. You can just simply go to the chat box. There's a live link there posted, and you click that on, and it will send you directly to that sign-up page. Okay, so we're just about at the end. If you have any questions, please ask them now. All you have to do is go to the question and answer box in the GoToWebinar column, type it in, and I'll answer them to the best of my ability, okay? All right, let's see here. First question, does the PET D require food and water? That's a good question. No, that's the beauty of the PET D. It doesn't provide, doesn't require anything. It's one of the simplest PETs to have because it's just right there. And that's actually, it really takes all the work. We've taken all the work out for you. So that really is a proper question because it is like a PET, but most times when you get an indicator or some type of tool from a vendor, there is a lot of proper care that has to go into it. You have to readjust it, maybe edit it, maybe you have to, reassign it for a different time frame or a different market. The PET D actually doesn't. There's nothing you have to do and alter it. It's a proprietary formula and an indicator, and we've done all the work out for you. So all you have to do is simply click on PET D, and it's right there. Okay. Question, do you use the 50-period simple moving average in sync with this pattern? You can. Once again, this is where we always tell students there is no one right or wrong way to trade. A lot of our students like to only take the sell signals that are below the 50 and only take the buy signals that are above. If you want to do that, you will even increase your odds for consistency even more. But many students say, well, Steve, I missed some good setups waiting for that to happen. Well, remember, we do not teach nor trade systems where everyone has to trade the exact same way. In fact, we encourage you to experiment. If you feel you don't need the 50 period, that's fine then. You're doing nothing wrong as long as you have the PET D. If you feel you want to trade the PET D with the 50 period moving average, that's fine. There's nothing wrong with these tools because they're both highly consistent. The only thing wrong with trading is when you follow or mimic someone else and have no say or no input. Remember, I want you to have the input. I'm just here as your instructor guiding you along the way. I never tell anyone what to buy or sell. I never tell anyone what the perfect time frame is or what the perfect market is. I never tell anyone what my opinion of the market is because that would be doing you a disservice. Our goal is to put that power in your hands so that you never have to ask anybody, what do you think of the market? What do you think of this stock? You'll know automatically from what we teach you what you think and what you should do. So that's where we want to get you to. So if you want to use the 50, it's up to you. And there's nothing wrong with using it or with not. Let's see. The PET D is the 15-period exponential moving average, right? No, it's not. It's not even a moving average. I know I've gone online and I have to laugh at some of these chat rooms and stuff, how everyone has figured out what the PET D is. And they all know it's some formula or a moving average. And they all seem to have it all figured out, and they say, don't waste your time or money. And trust me, I have never found one person who has correctly identified what the PET D is. Here is the problem, though. It really doesn't matter because I can guarantee you, if I told you what the formula was right now, I can almost guarantee that the majority of you would still lose money. Because the secret of the PET D is not so much in the formula. The secret of the PET D is knowing how to apply it correctly. And I can almost, like I said, guarantee you would all apply it incorrectly. So what type of service would I be giving you if I just gave you the code and let you work with it and let you lose money? The service I'm providing with you is educational correspondence. As a student of mine, you have my private email. You can correspond with me anytime you'd like for questions, and I teach you what the proper way is to apply the PET D. So many students think it's a top and bottom formation, and that's what you should be looking for, and it generates signals. No, the PET D is not a strategy. It's not a system. It's simply an early trend detector that is translating what the market wants to do. Now, there are many ways to apply it, and I show you how to do that in the courses, okay? Let's see. I'm seeing some question here, the kind of the repeating of the other one, so many of you have the same questions. Someone is asking, what is the difference between a solid candle and an outline candle? Good question. Well, I'll just try to explain it as simply as possible. A solid candle, well, first of all, let me even backtrack even further. When candlesticks were first introduced to the United States, roughly in the 70s and the 80s, that's when I was first introduced to them myself, they were just two colors, white and black. So if you had a down day, that was colored black. If you had an up day, well, the back of the paper or the screen was white and you just outlined it black. So you knew if you had a light color, it was an up day. If you had a down day, it was colored black. Now, for some reason, it was very difficult for most Westerners to understand candlesticks. They just couldn't grasp the concept. So what a lot of the vendors and what a lot of platform generators did was to color them. So they would color a down day as red and an up day as green. Well, that gets in the way of the pet D. So what we've done is stayed with the conventional candlesticks where a down day is black and an up day is outlined black. Now, once we apply the pet D, a down day is now colored red if it's in sync with the pet D on a downward trend. And if it's an up day, it'll still have a white interior, but the outline will be either green or red. So if you have an up day, you'll see the interior or the body will be white because the day closed higher. But simply because the day closed higher does not mean that you're in an uptrend. I mean, sure, we've seen during the crash of 1987, 2000, 2008, they all had days where they went high for a day or two, and then we resumed the crash, okay? Did that mean that that day was in an uptrend? No, it was just an up day or 2 days in a downtrend. So what the pet D would do would color or outline that white bar red, telling you that even though we may have closed up 20 or 30 points, the outline is still red. That's still telling us this is just an up day in an overall downtrend. The pet D is still translating that the trend is still down. So that's actually a selling opportunity. It's the same way with a down day. Okay, many times you'll see a down day and the market went down maybe 20 or 30 points. And many times you'll see that inside of that bar colored green. And people will say, why is it colored green? Well, because the pet D is saying even though that day the market or the stock was down 10 or 20 points, the overall trend is still up. So this is a buying opportunity. This is not something you should be looking at as a sell. So this is another way I teach students to look at it. See, this is what I mean by being able to apply this properly. Most of you would not be able to discern this, and you would not be able to properly identify these things. This is the beauty of the pet D. You have to know how to properly apply it, and you're being taught by someone who's been using it on a daily basis going on 4 decades now. So I can't think of a better way to learn how to use it than by someone who uses it in his own personal trading for the last 4 decades. Okay? So as we come to the end of our presentation today, remember, this is a great opportunity. Only less than $500 down, one-time fee, and then simply $97 per month. And you've got the full course. You've got 1 full year of the platform with all the other things included on it as well, which includes that live Bloomberg TV. And lastly, you have personal, educational correspondence with yours truly. You can contact me anytime you'd like with a question, and I will be there to answer it for you, okay? So please remember, take advantage of this. If you have any more questions about discounts or pricing or the platform, contact Pro Trader Strategies. I would suggest calling them up. Remember, there's absolutely no obligation. They would be more than happy to answer questions and then leave it up to you to decide. But you must act quickly because remember, if you take too long, we might go back up to that normal price of $3,000 regardless. So take advantage of this discount while you still have it, okay? In closing, I just want to say thank you so much for attending today. I hope you learned a little bit about candlestick trading. I hope this helps you. But more importantly, I look forward to all of you becoming students of mine in the Candlestick Combo course. Thank you so much. I'll see you next time. Bye-bye.